Well, it's the big day for the Fed today, and what are they going to do? Well, only time's going to tell, and I'll let you guys know at the end of the day. But what we want to focus in on today is the inflation numbers and where they're going to go and why the Fed's doing what they're doing. But this video, doing my research on this, kind of, I hate to say it, this word, and YouTube's not going to like this, but it pretty much pissed me off. And I want to show you guys where the inflation numbers are and why I think that maybe we're getting taken advantage of. So without further ado, let's get over to the headlines that we're seeing. So here are the inflation breakdown for May of 2023. So if you break this down, and I'm not going to go through all the numbers because I go through that on a daily basis with you guys, but if you break this down, here's where the numbers are really out the roof. So motor vehicle repairs. Why? Well, I guess supply chain issues on parts, maybe. Okay, and then motor vehicle insurance. Why are we getting gouged there? Don't know. Food from vending machines and mobile vendors. Why are we hugely getting, hosed there? Not sure. And then you go all the way down through this list. Okay, so then the last thing down here, the biggest component of this is we want to look at shelter. So shelter is right in this area here. Where is it? Where is it? Where is it? Where is it? Rent for primary homes, 8.7%. That's what the analysts are saying. I'm contrary to that. I'm thinking this number should be actually down on the negative. We were 8.8 last June when we hit the peak. So we're about halfway down through. So we're about 3, maybe 2 or 3%. So when this factors into these numbers, because this is one third of the CPI numbers, one third of our inflation numbers come from housing. When this number comes down to 2 or 3%, you're going to see the inflation dramatically drop. However, there could be some monkey wrenches into this thing. So first thing we see is why economists say the near certainty that housing inflation will end soon. I'm going to show you that, or I'll leave a caption in this article down below so you can see. But here's the areas that I really want to start showing you. Greedflation is replacing inflation as companies rise prices to maximize their profits. So in the food industry, I actually have a food manufacturing company right next to my office, and I talk to them all the time, and they're like, there's no really shortage on a lot of things. It's labor costs that are killing us. And then yes, there was some fertilizer issues and other things like that, but it's labor costs and just, we're raising prices because we can. So I'm like, okay, that doesn't really make sense, but you're going into an economy where, things are getting tight and everything else. He's like, well, we got to raise these prices because our labor cost is going up, but we continue to raise them and raise them and raise them because we can. So let me give you some more information about this. You always know that I really get ticked off about oil and gas prices. So on my way to work today, gas prices on Sunday, I was downtown with my wife having dinner. We drove back on Sunday to the house and gas prices were $3.79. This is on Sunday. Today on my way to work, it was $4.49. Really? So let's get over, did oil spike all of a sudden that I don't know of? So here's basically where oil's going right now. So if you see this, it's like, okay, Dan, it was way up here and then it was way down here and then it's back up to here. So what's the big deal? Well, let's go out 5 days. Where's oil going? Well, it went from here, about $73 a barrel, down to here. Okay, that's coming down, but nothing really to write home about. Well, then we go over to here, and we were up here at $74 a barrel, and that was just a couple months ago, and now we're at $67 a barrel. Okay, still not that bad. Well, let's go out 6 months. Well, let's go out a year, 1 year. Okay, remember back last summer when gas prices hit $5, $6, and everybody's like, oh my God, what's happening? Oil prices at that time were $110 a barrel. So there's $50 less today, and gas prices are only a smidgen lower than they are. So are we getting hosed there? Well, that's just one piece of this puzzle. Let's get over to it. But here's where gas prices went. Here's where gas prices were back then. They're saying, this is a chart by one of these chart things. I'm telling you, on my way to work today, it was $4.47 in Chicago. So I'm not lying about that. I can take a picture for you. The next thing is, oh my, Shell's going to boost their dividend. Shell, the oil company that's suffering so bad right now, they're going to actually increase their dividends by 15% while they're struggling, while they can't put enough gas on the roads for all of us. Interesting. Then another piece of this puzzle I want to go over with you is drug prices. Now, we have companies such as Merck and Eli Lilly. Look at the news today, guys. This is 1 day ago. In my chart right now, I can show you, well, it's today's chart. 1 day ago, Merck sues the US government over negotiations on drug prices. Okay. Eli Lilly jumps on the bandwagon and say, if you reduce drug prices, we're not going to be able to develop things. Okay, that's interesting. I agree with them. We should be able to fund this stuff. But how much money do these guys make? Well, the guy at Merck just made $15 million last year. Poor guy. Because if you go over to Eli Lilly, the guy just made 17 million in stock awards in 2022, the highest award so far in the category, and around 2 million more of his equity payout in 2021. His cash bonus grew 9% to 2.7 million. So these guys are getting millions and millions and millions of dollars, and then they have the balls to go over here and say, okay, we're going to sue the federal government because you can't negotiate prices. So guys, this is why we have inflation. Okay, so if you're ticked off about this, make sure you go to the election booth next year and make some changes. That's all I got to say, because I don't know how else to fix this. Now let's get over to the housing market. You guys are saying, okay, the housing market might crash. What's going on there? Well, mortgage rates are starting to stabilize, and I'm going to go over some data with you for there. But one piece of the news that a lot of people just don't forget: we have a lot of foreigners buying properties right now. When we were downtown over the weekend, I ran into a young man, or not a young man, but a guy about my age, and he was in town from Peru. Okay, he's in town from Peru, broken English. Him and his wife were sitting next to us at dinner, and we started a conversation up, and he was in town because they were at the opera, and they were just in town from Miami. He was from Peru. He went to Miami because he's building condominium complexes, in huge condominium complexes. And I'm like, well, why are you buying in the United States? So he started going off on all this information on why. Then I'm like, okay, I know foreigners are buying a lot of our real estate, but is it enough to really sustain the housing market? So I did some research last night. And when you go down through this, you can go down through here, and there's a simple little format right through here. Here's the top countries buying real estate in America right now, folks. We got China, $6 billion in real estate. That's a lot of money. Then you got Canada, $5.5 billion, on addition to the $6 billion from China. Then we add in India at $3.4 billion and Mexico at $2.9 billion. This is just last year. So we have $6 billion from China, that's 6, plus another 5, that's 11, plus another 4, that's 15, plus another 3, that's 18 billion, almost 20 billion in real estate that foreigners are buying. So the caption of this video is just saying to guys, the inflation, where we're sitting on pins and needles waiting for the Federal Reserve to just basically guide our lives with all this, we should get more and more involved with our communities, our elections, and everything else to help resolve all this stuff. Because if you're really ticked off, hopefully you're just half as ticked off as me about all this stuff. You want to make a difference, and that's what I'm trying to do. So my name is Dan Frio. I do this rate update every day to inform you guys real estate, but every once in a while I got to give you the concept of what's in the background. In the background right now, we have the Federal Reserve doing what they're doing because of inflation. But we're seeing a lot of companies are taking advantage of us. And also on the real estate side, there's so many facets of this real estate business, guys. You can't watch one entity or one part of news and say, okay, that's a good idea to buy real estate now or not. It's a decision that you and your family have to make, or if you're an individual, is it something you could afford? Is it an area that you're going to stay in? Do your research if you're looking to buy your first house, and we would love to help you in that scenario. So if you want to reach out to us in regards to getting pre-approved for a loan, or maybe you want to get kick the tires on how much can you actually qualify for. Maybe you're drowning in debt because of all these things that we have, and you're just like, I have a ton of equity in my house. How do I capture that to get some equity out to pay those high interest rate credit cards, because the Federal Reserve keeps raising rates and my credit card rates keep going up and up and up. So without further ado, with all the news that we have in today, basically the one piece of news that's coming out today as we're sitting on the sidelines waiting, what's the Federal Reserve going to do? So later this afternoon around 3 o'clock, I'll post a final video for the day to let you guys know what the Fed did, what my projections from there are. We're going to actually read the transcripts before I do my video to guide you guys on future guidance on what the Federal Reserve might do. But with all the data out there right now, what's going on with mortgage rates? So to do that, we go over to to the MBS market. So why are we watching the MBS market? Well, this is what I see on my screen on a daily basis. I watch the bond market because, as I said, I'm a mortgage advisor. I want to give you guys ideas on what's going on with rates, what programs you can qualify for. Is a down payment assistance program the right one for you? Should you go conventional or FHA? Those are the questions we're going to help you answer. But we try to keep a beat on what's going on with mortgage rates, and we're doing that right through here. So we follow the mortgage-backed securities market. I don't follow the 10-year Treasury because there's no reason why. Because if we have access to the MBS market, that's all that we need. So right now we're seeing in the markets right now, the MBS market is up 6. If you squint, you can see that behind the screens right there. It's up 6. What does that mean? Well, anytime the price, what you're seeing right here is the price of a bond, the mortgage-backed security bond. When the price of a bond goes up, that makes the yields, the interest rates, go down. So we love when this number's up. We don't see much of it. If we go back to the last 5 days or so, it's all over the map. So please, guys, don't try to time the market when it comes to interest rates. Get a hold of us. We can help you scan over 80 different lenders throughout the whole country to help you find the best rate in the markets. So where are rates right now? Well, these are the top 6 programs that people use when they're buying or refinancing a house. These are mortgage rates published by Mortgage News Daily. They're not my rates. They're not any individual company's rates. These are the averages. What these rates represent is a borrower that's in this scenario. They have a 740 credit score. They're putting 20% down. They're buying their first house. It's going to be their primary home, and it's going to be a single family home. All 5 of those criterias. If you have those 5 criterias, your rate's probably darn close to that rate. However, if you have a lower credit score, rate's going to be higher. If you have less of a down payment, rate's going to be higher. So you get my gist. What you're seeing on the screen is probably the best rate in the market right now. So that's it for today. If you want to find out more about me and my team, all I need you to do is do this. Check out the rate update. If you're like, hey, Dan, I really need your help. How can I get a hold of somebody? Well, it's pretty simple. All you need to do is give us a call, 844-775-5626, or apply online. Just apply online. After you're done, within probably hours, you're going to get a phone call from me or one of my mortgage advisors going over your application with you, going over any questions that you might have, and proceeding with you to give you the steps on how to buy your first house. Or if you're like, Dan, I really need some help from somebody. How can I reach out and just get some help? And it's after hours. Well, we have a button down below that you can schedule a one-on-one consultation with me or one of my mortgage advisors as well. We'll do a Zoom call or a phone call with you to answer any and all the questions that you have. No high pressure sales, just an educational session for you guys. So thank you so much for watching. If you like my videos, all I ask you to do is 3 things. 1, click the bell. 2, give me a thumbs up. And 3, subscribe down below so every time I post a video, you get an alert. Take care, guys. Thanks so much for watching. And I'll come back later this afternoon with an update on telling you what the Fed ends up doing and going through the projections of where I think we're going to go from here. So take care. See you later. Bye-bye.